All right, everybody, what's up? It is Friday, June 5th. Big up day in the market today. We had an unbelievable number. 2.5 million jobs created in the month of May. That shocked a lot of people. I got to be honest, it shocked me too. Because May was when we went into the lockdowns. Well, I should take that back. Actually, when we went into the lockdowns in March, we came out of the lockdowns by mid-May, so there was a surge in hiring. Here's the thing. Let's talk about this market rally, because first of all, a couple of days ago I said, finally starting to see some evidence in the tax flow data that things were picking up. Remember, I posted that video. Bullish, I said. Finally starting to see some evidence. But at the same time, I was saying, short-term, market looks overdone on the upside. Now today, obviously, we had a big day. So you might say, ha, Norman, you messed it up. You missed that big rally. Look, I was in the market at the bottom in late March, early April. We rode it up. So yeah, I took money off the table. I raised cash. Today I raised some more cash. I sold out some stock positions. I want to raise cash for the pullback. People jumping in now are people who did not get in the bottom in late March and early April. These are people who wait and wait and wait, and it's like, oh, everything is good, everything is fantastic, now the numbers are good. They waited and then they jump in. You don't make money that way. It's simple. You don't make money that way. I mean, this goes back to something I've been talking about here for so long, the headline traders. You know, I've been through this a million times. You know, they all sold on the bad news back in March. They're all buying right now. Now it's good the economy is coming back. And I've been saying that we're going to get reopenings and the economy is going to come back. And I've been saying, look, every day I'm looking at the data for evidence that things are starting to pick up. And a couple of days ago I said to you, hey, look, I finally see the tax flows. Remember, I've been talking about tax flows, the tax flows. I don't see it. And then I told you, I said the tax flows are picking up. As a matter of fact, I think I labeled that video bullish. Here's the thing though. Let me point out a couple of things. Okay? All right, so I've already talked about people jumping in here now after the market's up 40% off the bottom, and they waited and they waited and they waited and they waited until they saw things looking good. Again, I'm going to repeat, that's not how you make money. It's not how you make money. But set that aside. You might say, oh, Mike, you're just saying that because, you know, you got short too soon, or you got, no, you know, we made very good money. And that doesn't include other positions that we've had on as well. All right, so let me point something out. A couple of things. Brand new data, as a matter of fact. You know, I look at the bank data as well every week. Now, that doesn't come out every single day like the daily treasury statement, but the bank data comes out every week. And hot off the presses tonight, we get the data for the latest week ending May 27th. And one of the things that I've been saying to you guys, I'm looking at consumer loans, particularly credit card and revolving credit loans. That is a good barometer to see if people are spending. I mean, it's great to see people going back to work. And that probably will translate into some spending increases down the road. But so far, in that credit card and revolving credit loan category, another week of contraction. That was the 12th week of contraction. Now contracting at a rate of 7.1% year over year. It was a 95 billion worth of contraction. And I explained to you that the only way that the outstanding balances of loans, of any credit, the only way that could shrink is when the loan is paid off. So we continue to see households, individuals paying off their credit card debt. It's not going into spending. Now that may change in a week or two, okay? Just like I saw the data get better, but right now it's still showing not just contraction for the 12th week in a row, it's showing an acceleration in that contraction. That's number one. Number two, last week I told you that for the first time we saw commercial and industrial loans start to contract. Okay? It was like the first time in 11 weeks that was increasing like crazy, right? Because corporations were taking out those PPP loans, and those loans were backed by the government. Now, commercial and industrial loans are starting to contract too. This was the second week in a row. So it wasn't like a 1 week thing. That happened again now in the latest week. So all of this I reduced down to, or I would call this balance sheet consolidation. Like people and now corporations still want to pay down debt. And again, we might see the data change in another couple of weeks, but right now, you got to understand new variables, right? I talk about that all the time. Market's up 40%, more now, right, with today. New variables. Yes, there's a new variable that people are going back to work, but the market had anticipated that by the rise. Just like I said, when it crashed, it anticipated the contraction in the economy. What's the new variable? We haven't seen any pickup in these other data that I look at. And that's really focused on consumption. You need to have that. What else? Bank residual. What is bank residual? Residual is a fancy name for saying assets minus liabilities. What is assets minus liabilities? That's basically your net worth. That's your wealth. So you could really say bank wealth. Are the banks getting richer or are they getting poorer? We've had now the 4th week in a row of a contraction in bank residual of almost 40 billion. That's a big number because that's like bank capital and they could leverage that up, 10 times. 40 billion in the last 4 weeks. Now bank residual down to the lowest level since February 5th, the week ending February 5th. Why is that important? Look at bank stocks. They've been rising. They've been doing very well. Bank net worth is shrinking. Let me ask you something. If your neighbor's net worth was going down, would you invest in him? If your neighbor was getting richer and richer, wealthier and wealthier, yeah, you'd invest in him. If your neighbor was getting less rich, his net worth was shrinking, that's not a good financial position to be in, right? That's all I'm saying. I'm not saying it's going to be a crash. I'm not saying, but things to me look stretched. Now, let me make one final comment because, some of you might say, Norman, you said you were bearish and this and that. It happens, okay? It happens on the downside. Well, I might be early. It happens on the upside. Can't do anything about that. What you can do because I've said so many times that the destroyer of results is the seeking perfection. Like you have to be exactly. That's not what works. You may think that's what works, and you may be on the endless quest to have a system that gets you exactly me, and you've heard me talk about this so many times. It's about action. It's about taking action and then adjusting. It happens. We never know how far a move can really carry, either on the upside or the downside, because you're dealing with human beings. You're dealing with human emotion. You have to stick with basic conditions and stay focused on just your analysis of the basic conditions, and then you use your mental game. You course correct if you have to. You can't get caught up on, you gotta get the exact. That's not how anything works. Action produces results. The quest for perfection is the destroyer of results. I've said that so many times. Let that sink in. Stay safe, everybody. New York City opening up phase 1 on Monday. Have a great weekend. Bye. Oh, go to my website, sign up for a 30-day free trial of MMT Trader. All right. And by the way, if you go to, and that's at pitbulleconomics.com. The link is in the description below. And my first podcast is out. If you go to Pitbull Economics and if you click on the tab that says podcasts, I put up my first podcast. So check it out. Bye.